Okay, Facebook options today on January the 29th, 2021. Facebook has dropped after a strong earnings report, and the stock price has dropped almost 4%. It's from its highs. And if we take a look at let's look at the trend. As you see, Facebook has been trending up. If we can draw a line right here, it's kind of below its trend lines, which means there's a sell-off, and more than likely it'll pop back out just based on a trend. So if you're looking at trading Facebook options right now, will probably be the best time to buy on this dip. It can still drop a little bit more, but I'm looking at the historical volatilities at 28.75. The implied volatility is at 26.06, so still high. So when volatility is this high, you want to be on a credit side. You want to be selling the options, or you want to be either doing a covered call. You can do covered calls if you got that amount in your account. If you have a small account, then I suggest you do a put. Let's see. Let's look at credit spreads. A credit spread or a bear put with at least 40 days out. I'm sorry, not a bear put, but a bull put or credit spread with at least 40 days out. So what's the day? Let's go to October 15th. And let's see what we have here, because I'm about to make a trade, and this is bar chart showing some of the potential probability of breaking, of max profit at a certain amount. Break even is 375. Let's see, probability. I like to just use this to gauge max profit, max loss. And that will be the first leg, the second leg, if we went that far out. But I'm going to do just a basic put credit spread at this amount because of what Facebook is doing at this time. And I'm going to do that now. Also, if you do have a lease, because if you sell, you can also sell puts, just not cash covered puts, but you got to have at least the amount in your account to buy that in order to do a cash covered put. But if you got a small account, and I would just go here, I'm doing this on my Robinhood. I've already did it in my TD Ameritrade account, but now I'm going to go over to my Robinhood and do this. So I'm going to right now, let's see, let's sell a put at the 360, and let's buy one at the 355. And let's see, no, I think we need to go up a little bit more so my profit can be a little bit higher. Let's exit out of this. Let's go here. Let's sell it at this amount. Let's buy. Let's see what the calculator says. Okay. 235 max loss, 265 max gain. So max profit. Yeah, I think that'll be a good amount. Or let me even go higher. Let's go to 270. Let's look at 270 because it was already at this price range before it dropped. And let's look at 365. Oh, even better. 212 max loss, 288. And the break even at expiration we need to be at 370 by October the 15th, which more than likely it will be there. Because Facebook is a great company with a lot of growing revenue. So I'm going to go ahead and close. I'm going to go ahead and submit this order. So done. So hopefully my order will get filled soon. I just did a put credit spread. Like I say, you can either buy a call if you want to just buy a call outright, thinking it will come back up. You can just at this date, it will cost you. I would buy it around either this price or that. It will cost you around 1,700. But this very risky, so you got to make sure you know your exit. It has to go to 377 before you to break even. And let's look at the put side. Like if we had the amount in this account, I could sell a put at this amount, and my break even will be at 360. You see how you can see how it's better to sell when implied volatility is high. It's better to sell options when that, instead of buying calls, but you would have to have this amount in your account. More than likely, you won't lose this because Facebook is going, but you would have to have 34,000 in your account. You'll make, that amount. What they'll do is just hold that amount until you close the option, or until it expires, at that price. But it's better to be a seller when implied volatility is higher. So if you had that amount in your account, you would make more off the, you would be able to close it a lot faster when you selling a put versus just buying a call. So that's exact. Or you can go, if you wanted to do the debit, you can go here. You can buy at this price, sell at this price. Well, that's going back. That's a call of credit. I mean, I don't like doing on stocks like Facebook that's bullish. I don't like doing bear credit spreads because it's just, it's harder to make a profit on a stock like this on a bear credit spread when it's very bullish. So let's look at this. Let's go to buy. We can buy at this price. Yeah, hold on. Buy at this price, sell at this price. And you see same results. We got to get to 370 in order to realize our, to get the break even and then our profit, So if we get to 370, the profit will be 287. And I actually did a video a while back about how to do the iron condors on Facebook. So just check out that iron condor video where you can get a credit of like $400 and only risk $47. That's if the stock closes in the short part, in the short legs, closes in between those short legs in the iron condor. But that's basically it. Facebook has dropped at least 4%. Now's a good time to do at least a put credit spread on it, at the range. I say by looking at this chart at the 370, at least 50 to 90 days out. That's what I would do. That's what I just submitted. So, my order is here. So hopefully it gets filled by the end of the day. And that's it. So take advantage of this drop in Facebook and make you some money. If you like this content, please like, subscribe, and share it. Thank you.